Welcome back to another video in our Currency Strength Index playlist. The Currency Strength Index, the true mover of the market. So just to cover quickly and recap what we've done in a previous video, that if you have not watched, it's absolutely crucial that you watch it, because then it will start to make sense. So here we've got the Currency Strength Index, okay? The major currencies of the world's economy: Great British Pound, US Dollar, Euro, Swiss Franc, Japanese Yen, Australian Dollar and New Zealand Dollar. So we have looked at the Euro USD, and we have explained that the true mover of this is the Euro paired with all of these, which have each got their own index. So if you look over here at my watch list, you've got DXY, which is a dollar index. You've got CXY, Canadian index, AXY, Australian, BXY, British, Euro and Japanese, and so on. And understanding the indexes of the actual currencies will help you immensely, and I promise you it will make you profitable if you have the right risk management and psychology and all that good stuff locked in. This strategy works. I've been using it for many years. In this playlist I've shared several different strategies, in all catered around the Currency Strength Index. When I'm looking at the charts, I can trade mean reversion, I can trade FTSE. FTSE was a video I made here on Sergei Malaga, who is multiple time World Cup champion, the Gold Cup champion of both forex and futures. You can see here a mean reversion strategy. Everything here is all based round about the Currency Strength Index. In the video I made on Sergei's strategy, it uses this here. This is basically all these indexes that you see on the chart. So trying to hit home in these videos that all the garbage out there on YouTube on what moves the markets, it's just, there's so much garbage. What moves the markets is the currency index, okay? All these major economies, all these companies, Toyota, Sony, Apple, Panasonic, Siemens, Volkswagen, just look at the numbers here. Look at the numbers here. 260 billion per day. Do you think this is retail traders? This is institutions and hedge funds, and obviously a little part of retail traders. But this is what moves the market. The transactions between JPY, Great British Pound, Euro, AUD, Swiss Franc, NZD, or any combination. And this is excluding the miners. We've got all the miners as well to consider. So let's jump right into an exciting part of the video where we have people break down a strategy. Okay, let's pick, for example, the the US dollar. So now we're at the US dollar index, the true index, the true strength of the US dollar. This is taken into account every single currency that the dollar is paired with, not just the majors but the minors too. So this represents the true strength of the dollar. Okay, that's what this is. That's what this is showing us. Not paired with anything itself, the dollar index. Okay, so the baseline currency of the dollar here on this last week of the 7th, I've just basically drew a box. The box is green because we can clearly see here that this is in an upward trend. Okay, we can confirm this by just looking at the charts at the weekend, on a Saturday or a Sunday, and we just need to look at the charts for seconds and we can see that this is in an upward trend. Okay, this is all I need to know my bias. The second thing I'm going to do is I'm going to come to the pair Euro Great British Pound. I could come to the indexes of the British Pound and see that they are in a downward trend. I could come to the Euro index and see that it is also in a downward trend, because both these are correlated and they tend to move together. I want to give my best self the best opportunity. So the dollar is strong. What am I going to pair it with? The euro or the Great British pound? Because these are the liquid markets that move the most. So I want to be trading the dollar against the pound or the euro. And I can see that both indexes are weak. So how do I determine what one? Very easy. I go to the pair, euro matched with Great British pound. I can see that the euro is strong, and it has been for 2 or 3 weeks against the British pound. So there I have my answer. The pair I'm going to trade is GU. Great British pound is weak and the US dollar is strong. That's what we've done. We've established that the dollar index is strong, and we've established that Great British pound is weak, and even against the euro it is weak. So we come to the 1 hour time frame and we simply put EMAs on our chart. Now here you can see a black line that represents the EMA 200, an orange line that represents the EMA 100, and a blue line which represents the EMA 100. Now why do I have the 3 on the chart? Because sometimes different ones get respected. You can see here the 100 is being respected, okay, and you can see here the 50, just let me double check here. Yeah, the 50 and 100 has been respected here. As we come down, you see the 200 we entered before that here. So we've just got the EMAs there, and we're going to build a story here and say where are we going to short. And the reason the 3 EMAs are good is because you could use them as your stop loss also. So let's drill down and look at the first trade we took. So again, this is based off our analysis saying the dollar is strong, the pound is weak. We are looking to short the pound versus the dollar. So we come here, we can see that we've came up through the EMAs, the 3 of them. We've came up right through them all, and ideally we want to be entering our trades or looking at taking positions as we are coming back through an EMA. So instantly I see this big candle come through, it breaks here. If we actually come to the 15-minute time frame, you can see here I've drew a little line, okay, just here, and it's creating a little bit of support here. As soon as we break through it, I enter the trade. So I enter this trade and I put my stop loss just above the previous wick of the previous candle. My take profit, I'm aiming for this kind of area here. So as you can see, that lines up perfectly. And this trade, ended up over 4-1. Okay, this is a trade here that we missed, but that would have been a perfect entry as well. You see we can back up, touch the EMA 200, come back down with engulfing candles just here. It happened at night time, obviously I wasn't at the charts, but that would have been a beautiful entry, and we could have targeted over here. That would have been a massive trade. Let's just throw the trade icon on here. Wrong one, we are shorting. So we would have shorted here on the engulfing candle. Our stop loss would be the wick on the candle before, and our TP would have aimed for this area. So we'll line that up. And as you can see, that was an 11-1 trade that played out. Look at that, a beautiful trade that I missed. So again, I cannot stress enough how important the currency strength index is in the analysis on saying something very simple. Forget everything you know, ladies and gentlemen, and just look at the facts, the simple facts. The dollar is strong and the pound is weak. We don't need to know anything else. If you've been trading for 6 months, you obviously know EMAs and pullbacks, and you've got a little bit of knowledge there. And that is all you need to know. It's totally simple. This is the trade that I do during the day. Now the previous video that I showed you, the Sergey Malaga strategy, he also uses currency strength index, as you can see down here in this zone. Down here, this shows you the strength of all the currencies, and Sergey, I keep hitting it home, has won the forex and the futures Gold Cup championship multiple times, and his name is just always on the list. I think he's moved more to automation now. I don't know if he competes anymore in the Gold Cup, but he certainly won it this year or last year in 2023. I'll put the link below to the championship listings and you'll see his name appear there. But yeah, he uses that. So when I'm trading during the day, I can obviously see this, what I'm teaching just now, these pullbacks happening. I'm also keeping an eye down here. So I've also got this as an entry, and I've also got a mean reversion strategy. I don't need any other indicators, I don't need anything else. I've got everything right in front of me just now that I need to encapsulate 3 different strategies. So let's move on. Again, the DXY, we just check this. You can check this every day to see if it's broke structure. Keep an eye on it. And yep, so we're into a new day now, so I'm looking at it saying, right, it's still going in the same direction. So come back to our chart, we're still shorting Great British Pound. And you can see here, I was on a family day out this day here, so I missed trading opportunities. I've actually lost where we were. We were up here. Yeah, but we're back here. So you can see here we've had another pullback. I'm on the 15-minute time frame. If you're on the hourly time frame, you can also see the pullbacks happen. So you can see here we pulled back to the EMA 100. We had a big engulfing candle, and sorry if you just want to be mindful that people watching the video may not know, may not have the knowledge. So the black candle here engulfs the white one, the black one, so it's an engulfing candle, so that's a sign to enter. And you can see if you actually draw, this is, remember we're on the hourly time frame, so if you draw a line under the bodies of these candles here, you're creating, I'll just make that thick, so this area here, you see how many times we bounced off that area and we failed to go past it. So we're forming a little support zone, and remember we are in the hourly time frame, so this is a kind of big support zone on the lower time frames, and then we break through. So that's where we took our trade. We enter, we have our stop loss above this wick here, and that was a beautiful 3.721. We targeted this low here. As you can see, that lines up perfectly. And I want to also hit home stop losses. You'll notice here that I'm tucking a lot of my stop losses in at the candle before. Stop losses for me should be dynamic. Anybody that tells you, oh, a 2-to-1 trade, oh, a 1-to-1 trade, there's no set in stone. Your stop loss should be based off of your trading day or your trading week. I have got tight stop losses here because I'm coming off of multiple wins in a row. Okay, multiple wins in a row. So I'm tucking my stop loss in tight here, and it's giving me a 3-to-1, 4-to-1 trade. If my stop loss was above the 200 EMA up here, this trade then becomes a 2-to-1. So that I know that where I want to take my profits is here. That's set in stone, I can't change that. That is where profits are going to be taken. So the only way I have got to increase my risk to reward is by tightening my stop loss. Now, let's say I was coming off of 2 losses. Total different story. My stop loss would probably be somewhere like here. I would be covering this zone here, okay, and certainly covering all of this here. Or I could have just covered the EMA 200, but my stop loss would have been wider. It would have been a little bit more conservative if I was coming off the back of losses. Most of the times when I trade on a Friday, I always have a 1 to 1 or a 1 to 2, a conservative kind of stop. Regardless of if I'm coming off 5 wins in a row, I want my Friday stop losses to be conservative and wide, because I want to end the week on a positive note. I want to end the week feeling good. I don't want to end the week on a losing note. That's just something I do. The same as a Monday. Sometimes on a Monday, my stop loss is a little bit more wider as well, because I want to start the week off good and not revenge trade. So for me, stop losses are all based off of your previous trades and your P&L. So here you can see mine was tight in against this candle here, and it produced a good 3-4 to 1 trade there. So our next trade was down here. We've actually got one here that we were in today, but yep, our next one is down here. We'll come on to the 15-minute time frame. So as you can see, we pulled back again to the EMA. We had this big engulfing candle, pretty much a mirror setup of what we had just previously. We will show again, so we'll draw this little line in this area. So you can see, and remember, this is on the 15-minute time frame, but we've got a little kind of support zone, failing to break through it, and then we get this big engulfing candle. So you can see it was after the candle that I've entered, not straight away on the break and not on the close, kind of mid candle. So I've seen it, we've come down a good distance. Not only have we come under this zone, we're starting to come past these wicks here as well. That's the reason why I entered the trade. Stop loss was just above these wicks here, and take profit. Was targeting this zone here. Now this zone's interesting because you will get to a stage where, right, that low's been taken here, so this is very worth explaining here as well. So let's say I had aimed for just this zone here, okay, we'd have the 1 to 1 trade. So I look further back because again the DXY, I can see it's rocketing to the moon. I mean, look at it, look, it's just on an upward trajectory. Look at it here, totally up. So I'm confident, ultra confident, off the back of all these trades we've been having all week. We've not had a losing trade, everything's winning here, and we've came to this zone, and I think we're going to break below it. So if we come to the 1 hour time frame and we look away back here, we can see here that this back here was a zone that had a reaction, okay? So I've marked this out with this big grey zone you can see in the background. I don't know if you can pick it up, but this big grey background area here is identifying this kind of zone here. So I have pulled this down further and not happy with just up here at a 1 to 1. I've pulled it down here thinking we're going to reach this zone, and I ended up getting a 3 to 1 trade there. Ended up closing the trade here at a 3 to 1. Wanted it to go here, but it was at night time. You can see here it's at 8-9 o'clock at night. I'm getting the kid ready for bed, and I don't want to monitor this trade anymore. I'll just close out of it because we're very close to this area. Please share this video with any of your trading friends and trading community. It is a really good trading strategy to use by knowing the strength of the dollar and knowing the strength of the Great British Pound independently. You can go into your trading week knowing that you're looking for shorts on GU. Please comment in this video below if you've found success, if you understand this video, if you've got any questions on the video. So this leads us to our last trade. This trade was actually took today. So today is Tuesday, the 15th of July. And in the UK time, 1:30, there was major news getting released in the States. and it was red news. So I knew there was going to be a reaction off this. I also knew that these areas here still had not been targeted and mitigated here, and there was also one here. If you can remember, we were looking at these areas in our last trade, so I felt there was still some play in this before the market started reverting, and I flipped strategy and started looking for mean reversion. But yes, we can see here that we've got these two zones and we're very close to it, and we're up here, so I've got a feeling there's still some play in here for a short. I look at DXY, I can see it's still on an upward trajectory. Never mind these last candles here, this was the news that actually did go in our favour, and it spiked up huge. So back to GU. So if we come down to the 15 minute, I think I entered this trade about 9:30. We'll zoom in and see. So we're on the 15 minute now, and as you can see, yep, 9:30. So I entered this trade, and the reason I did is, if we just look, again, we're coming off the EMA 100. This has been working out for us for the last 10 days. We've took multiple trades, we've not had a losing trade, everything's been winning. We hit the EMA 100, we come up above it, and then we come through it, and then we have an engulfing candle, so we enter the trade. You'll notice on this particular trade, as I mentioned previously, stop losses are dynamic, and I knew there was a news event coming up, so I knew there would be a big spike, and there absolutely was a big spike. If I just line that up, you can see here, big massive wick, and having traded for years, I know I need to consume this, I need to have my stop loss be able to breathe. So I decided to go above the EMA 200 with my stop loss, and it was wide, and it presented me with a 2-to-1 trade. I actually stopped this trade early. I just got out here because we were too close, very close, so I decided, right, let's get out of the trade, and I stopped out here at probably just under a 2-to-1. So that is the strategy, guys. This is the setup. Please listen to me when I tell you that the currency index is the key. It is the main thing you should be looking at when trying to establish a bias. If you just throw up any old chart like the USD CAD, for example, and you look at it here, and you're like, trying to base your analysis off of what? Support, resistance? No. You base everything off of DXY is strong. It's been strong for 2 weeks. Let's look at Canadian. It's been flat. Yeah, it was going up here, and it's just had a big massive fall off, and it's just took a steady decline. And as you can see, USD CAD, we're looking for long positions, and there you can see I've had a few long trades here. Again, you can see here, this trade has got a massive stop loss because it's Friday. Okay, again, I mentioned earlier in the video, I do not want to be getting out. I don't want to be getting out of a trading week on a loss. So on a Friday and on a Monday, I want to start my trading off good with a win. So I have wide stop losses, and I aim for 2-to-1. I'd even be happy for 1-to-1 just to get a win on the board on a Monday. So as you can see there, yep, straight up it went, straight up it went. Great trade, and that was a 2-to-1 trade. If you just come to the 1 hour time frame, you can see here we've had another trade bouncing off the EMA. Another trade here, bounced off this EMA. We got in very late, but bounced off the EMA, went right through the 100, right through the 50. Here again, bounces. Here again, bounces off this. So it's respecting here your EMA 100. So that's it, guys. The main thing to look out for There's actually a trade here that I've missed because I've been too busy in GU. I had this set up if it comes here, and I never took the trade. But look at the index. I always look at DXY first, the dollar. Then the most traded pair in the world is the dollar versus the euro, or the Great British Pound. So that's where I'll start. And there is times where things are flat and they're maybe not looking so good. So for a couple of weeks, I may need to ditch the DXY and I'll focus on something else. I'll focus on maybe JPY, just different combinations and different pairs, establishing this index is strong, this index is weak. So I hope this video has been helpful. Please do go to the YouTube channel. There will be a playlist here. The first video will just be basics of the mechanics of the currency strength index. Second video here, Sergey Malaga's strategy using the currency strength index. He calls it FTSE. He is a multiple time Gold Cup winner of forex and futures. And if you follow this path of understanding the currency strength index, you will enter the trade, you will enter your trading week. You will enter your trading week knowing, okay, I'm looking for shorts on GU. And you can see I'm doing it simply. You don't need to use the EMA. You can use something else. You're maybe using something just now. This will complement it. I don't know. This is just what I do because it's very simple and it works. Thank you for watching. Until the next time, please stay safe.